Hello and welcome. We hope that you're well and thank you for joining us today for this webinar on Galleon Gold Corp. My name is Jacob Willoughby and I'm a Vice President of Research and an Analyst at Red Cloud Securities Incorporated. Joining me remotely today is David Russell, President, CEO, and Chairman of Galleon Gold. We'll begin today's webinar with a presentation on the company by David, followed by a question and answer period. As a reminder, you can type in your questions at any time, and we'll try to get through as many as we can. But before we begin, I'd like to note that there may be some forward-looking statements made on this webinar, and I would direct listeners to the cautionary notes on page 2 of Galleon's corporate presentation located on their website. For Red Cloud Securities Incorporated, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. Also, we note that this webinar does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Company-specific disclosures for Red Cloud are the following. In the last 12 months preceding the date of issuance of the research report or recommendation, Red Cloud Securities Incorporated has performed investment banking services and has been retained under a service or advisory agreement by the issuer. Also, in the last 12 months, a partner, director, or officer of Red Cloud Securities Incorporated or the analyst involved in the preparation of the research report has received compensation for investment banking services from the issuer. And now, I'm happy to introduce to you David Russell, President, CEO, and Chairman of Galleon Gold Corp.
Great, thank you, Jacob. It's a pleasure to be here today once again and give you an update on what we're doing at Galleon Gold and specifically the West Cache project. It's a very exciting project, gold in the Timmins camp. Forward-looking statement, we're through that. We'll go right to the main program. We're a fully funded drilling program in Timmins, looking to complete a PEA by April or second quarter of 2021. Now, we're only 13 kilometers west of Timmins. What does that mean? Access is very good. You've got all the infrastructure for the people, the hospitals, the restaurants, all the services you need. The original compliant 43-101 resource estimate we started with, and we started to infill drill, was roughly 1,079,000 ounces as of 2013. Now, what we looked at and said, look, we need to bring the grade up, both the open pit, the underground areas on the PEA end of things. So we started out with a program of approximately 15,000 meters, and we went right through that 15,000 meters because we hit a zone called Zone 9, totally different than what we went to infill drill. And so we moved the program to 30,000 meters to move between 2020 and 21. And we found that new discovery, and it's roughly about 10 meters wide, very good grade. And we brought in a second drill rig from the same group that we're using, NLPH, from Timmins. They're our drilling contractor. They're doing a very good job. Each day we get roughly about 100 meters out of each drill, so about 200 meters. Our costs are roughly about, all up, we're talking assay, geologists, everything, about $160 per meter. So the burn rate is about 30 to 32,000 per day on this project. Not a lot of money, but if it was in the bush, it would probably be double that, or maybe triple. Now, we've also done a lot of other things. We've commenced baseline permitting studies for bulk tonnage sample. Our first target is to take this project underground with a ramp system, set bulk stopes up underground, mainly on the number 9 vein structure. That looks like the most productive, the highest grade, and let's see what it is when we custom mill it. We're looking at working with the ministry, the Surveyor General's office for mineral claims going to lease. That may occur in the next couple of weeks. We're also ramp designing. We've done preliminary economic assessments within the permitting boundaries of the archaeological studies, the groundwater hydrology, the sampling. We've got that all underway under Blue Heron and Story Environmental. That's all incorporated into this PEA. It's not just drilling or resources, but it defines the economics when you get to that point. And we expect an NPV value to come out of it. What that will be, you'll have to stay tuned till April to May and find out what that number is. But we're very happy with what's going on with this project right now. I'll start with who's our investors. Eric Sprott has about 23%. CCM Capital out of Germany has quite a bit on the retail side with their folks over there. For that's about a 59.2, and then management's got about 5.5%. The share price right now bounces around between 11 cents and 9 cents and that sort of thing. We're hoping to get a boost as soon as we finish this 43-101 PEA study. I think that's what everybody's waiting for. And then the shares outstanding, 470, options, warrants, everything fully diluted, 644. That's quite a bit, but remember we went through a merger with Explore and Pure Nickel and then created Galleon Gold. We have the vote to do a consolidation. I don't think it's time to do that. I think when that time is when you have really good news, like a PEA, put out that defines the value of the company. Now, the other question would be how much cash do you have? We have $6.5 million cash on the books right now. We have no debt. So we're well positioned for the rest of the year on this project and getting through this PEA study. Now, the directors on our board is myself. I'm the chairman, president, CEO. Been on many boards and companies in past history. I think I've got a pretty good track record. The same with Chris DuPont. He came from the Explorer side. He's got a great track record on the mining engineering side and putting property packages together. Mario Calantonio, he's out of Timmins. He's a professional engineer, consultant. Michael Hobart, he's one of your primary securities and mining attorneys in the Toronto area. He's been on boards with me before. Tom Kaufman, can't say enough about him. He's original M Partners founder. And Tom is our audit committee chair. Tom is a great person to have on the board because he understands the resource side, the mining side, the financial side. Gerhard Merkel, he's the appointee with CCM Capital for Germany. Great director. He's an entrepreneurial business type of person, a little bit different, but he understands the resource business. And then Dick Nana, he's a director with us. Dick was actually with me in Apollo Gold. He was the founding partner of Apollo with me, but his main key was he developed Black Fox, which is now owned by McEwen Mining. And JT O'Neill, he's with Eric Sprott's group right now. He's not an appointee. He just happened to be somebody who worked with me for many years, both Sarco and Apollo Gold. And I thought he'd bring a lot of experience on the resource side for the company, and the CFO and the things with Eric Sprott lends itself to that also. Where's West Cache? West Cache is just north of Sudbury there. You can see on the map. Great location. The air flight's about 2 hours from Toronto. Now this one shows, this slide number 7, this shows the camp. Okay, the mining camp, and for those that don't know it, it's a prolific mining camp just in this area and not going out in surroundings. About 70 million ounces of gold been produced. Black Fox is still in production. We put it in production in Apollo in 2008. It was merged with Linear Gold, became Brigus Gold and long down the road. But McEwen Mining's got that one. We rebuilt the stock mill from 800 to 2,200 metric tons a day. It's a great mining complex there. They've got 3 major discovery areas there that I'm just pleased that they're doing well with it. There's the Aquarius mine. You go into Hoyle, Pamour, and then you got Hollinger and McIntyre and the Dome mines. Okay, the Hollinger and McIntyre together, just for information, produced 30 million ounces of gold in history. And then you move on to the Dome mines that produced another 17 to 18 million. And still today on open pit wise, Newmont is still producing gold out of those areas. So, when you look at it, they're approaching 50 million ounces. So where are we in the relation to this? We're just down the line here. The big footprint here, yellow with purple outline, right next to Lake Shores, 140 Gap, Thunder Creek, a very productive mine area, but they're on the same structural trend we are. So it's nice to have good neighbors there. Again, we're located, if you come from Timmins up on the right side of the screen where the green is, follow the highway down, and then you go right through the property. We have the north trend up here. We've got the south trend, and that's what we're on right now. That's the most productive trend in the camp. And not too long ago, we picked up the Dwyer patents. These are patented properties. And again, we are going to lease on all the rest of it with the ministry now. That will require the Surveyor General's orders, hopefully in the next couple weeks, and then we'll get started with the survey. That's required for the permits to mine there. So there's the airport, the hospital, you got a power line running through the property, you've got a great workforce here. Then we've got Pan American Silver on Lakeshore. They're important because they've got the mine on the west side of us, but they also have Bell Creek way on the east side of Timmins, and they've got the Bell Creek Mill. We've had a discussion just briefly with them on will you have room in the next 12 to 18 months for additional ores if we want to test mine our ores. So we've had those type of discussions. There's also the Newmont Group in town. We haven't talked to them yet, but hopefully we will before too long. Now, we've signed an MOU in the past with the First Nation and the communities there. That's very important. And we're dealing with the Flying Post in Matagami, First Nations, Chief Chad Boisano and Chief Murray Ray. We have a great relationship with those groups, and we plan on having one for quite some time. The slideshow right at the core site, that's the most important site where the geologists and everybody are working, logging the core. Again, NPLH is the contractor out of Timmins there. The group we have at the site is roughly about 12, 13 people, and they're core cutters, they're geologists, and the disciplines we need to actually get everything put together, off to the labs and off to P&E consultants for the modeling and that sort of thing. But you see the core area where they log the core, you see the Quonset hut where the core comes in originally, then the outside yard. It's getting pretty full of core now. This is the first rig we brought on site, you see on the right lower corner. And you see the second rig, this one showed up November 17th. This has to do with vein number 9 being discovered. We couldn't keep up with drilling 2 structures with one, so we got brought in the second rig. Now, looking at the geological end of things here, what we do is say, okay, this is a mesothermal lode system, and just similar to anything in the Archean Abitibi greenstone belt. The geology is very similar to the Hollinger McIntyre mines. I wouldn't say it's exactly, maybe because we found the sediment-hosted rocks. And, the similar characterization when you're looking at chalcopyrite, pyrite stringers and veins and that sort of thing, and it's quartz hosted. We've got all the rock package within it, plus the sediment package. Now, the shear zone that we've got, we're looking at roughly along strike is maybe 1,500 to 2,000 meters. But the fact is, we've got about four kilometers to look at on our property. We can't do it all at once, but it gives us great blue sky potential on strike and down dip on this project. We've got roughly 415 core holes drilled for approximately 175,000 meters of core. And we've got intercepts ranging anywhere from 1 meter to 18 meters wide. And, it's just a heck of a great place to be when you're doing exploration. Now, this slide's pretty busy on slide number 12. This slide shows us that, the ore moves around a bit. We'll start on the east pit side here. This was the first pit they started drilling years ago. And since then, you can see all the holes we've infill drilled in the blue area here. The blue, if you look at the legend down here, you can see 2021 in the brown and the blue in the 2020 era. So we're stepping out more to the northeast now, saying, yeah, the structures do continue. There's another key point here. Before, it was thought that there was an offset in the structural trend here. This is called the gap area. What we've proven now with another string of holes through this area is that the west pit area down in here does tie with the east pit area. Now, is that going to add ounces? Well, I hope so. And you can see all the 2020 drilling in blue, and then all of a sudden in the brown, you see an area here. This is more of the number 9 vein system that's heading to what's called the West Deep area. And that's important because the West Deep is deep. It's 750 to 1,000 meters in depth where they've hit the sediment structures in years past. So we're furthering that, but we found it up dip and we're basically chasing it down dip. It's a 3-dimensional problem when you're doing this. And I'm sure the geologists stay up sleepless nights trying to follow this. But, it's a great geological Mother Nature puzzle when you try to put it together. This is a shot of the east area. We'll go first. These are the where we started, 20-001 and on down through 10. This gives you an indication of the open pit grades, 2 grams, 1 gram, 7 grams, 5. What we're looking for is the average to come up from where it was at about 2.5 grams in the resource base from 2013. And then you move on to the west pit area, 10 grams, 14, 2, 5, 9, 11. I think we're achieving the goal here. It's definitely showing that these grades are coming up on the west side here for the open pit. And then down below in 20-10, that was the discovery of the up dip portion of structure number 9 at 7 grams here over 9.7 meters. You've got 10.7 meters at 7.44. But also look internally to that on the hanging wall side. There's 3 meters at 14 grams, 3 meters here at 10 grams. That says a lot on mineral deposition that you can control where the higher grade zones are. Now, this is a plan view looking down. This is slide number 14. What we're looking at is number 9 structure here. This is pretty busy, but what we do is we drill on lines. This is the 125 line. This is the 75 east line here. And we try to actually intersect the structure enough to give us an indication of how is it sliding to the northwest. And, like I said, it's been a real puzzle trying to chase this down dip. You can see some of the structures or some of the grades here. We've got 97 at over 7 grams, almost 8 grams. And then you've got hole 82, 9.4 grams over 10 meters here, or 16 grams over 4 meters. So there is a high grade core of this structure, and almost every hole is identical and varies in grade. We'll say from 5 grams up to 7, 8 grams, and then the high grade section up to 16 grams. Okay, now when we're looking, this section would be looking more eastward here. It's not exactly east, but it's looking east. And you can see where we've hit it just below the glacial fill alluvium here. As you come down, we're just tracking the structure down dip. Now these structures, once you start getting down here, we're pretty darn deep in this area here. But the pleasant news is 9.4 grams across 10 meters or 16 at 4 meters. Things are holding together. This is on the next section, the 125 going to the east. Same thing here. You can see the structural trend here. You got 6.6 grams over 4 meters or 10.97 over 2 meters. And the same thing over here. You've got pretty darn good grades, pretty good widths here. Like say on 30 here, it was 7 grams, a little over 7 grams and 9.7 meters. Or 91 here, we had roughly about 6 grams, let's call it about 8.5 meters wide. So it's going to vary up and down, but the consistency is the structure's there. That's what we're looking for. Now, this is more of a, we'll call it a long section. We haven't put one out before. We're just testing out and building these long sections on it. You can see where the higher grade zone, and this is more of what's called a GT or grade thickness chart. And you can see, you can actually pinpoint some of the higher grade and the thicker zones in here. We give it a rating of 80, 60, 30, and 10. It's still pretty good when you're out in the yellow area here, right up to the alluvium, but it's showing you where all the high grade is. And we'll be plotting that up as we're doing the PEA on just where is it mineable and how can we stay in the highest grade ores as we're test mining. Okay, this is another one. This is a shot 3D looking east again. And what we're seeing here is the pit area, the pit outline here, coming down into this area here, the smaller pit, the bigger pit, and then you see the gap in between. There's some stringers in between, and then you hit the sediment zone over here on the contact. Again, this is quartz feldspar porphyry over here on the left, and then on the right, this is the sediment unit here that's hosting the number 9 vein structure. And you can see all the holes we have to keep swinging in just to hit those intercepts. Okay, this one gives you more of all the intercepts in between the pit areas, just showing the density of the holes we're drilling. I think we've got a pretty good handle on this pit, what it is, where it is, and how we're going to handle it in the mining phase. And this is more of a relation to what I call West Deeps. Now, West Deeps is over here. Now, we have started planning the ramp system. It's this black line up here down to the original discovery. This would be 160 meters below the surface. Now, this area would be 750 to 1,000 meters down below the surface. So obviously it's heading that direction. And that's the Rubik's Cube, or the puzzle we've got to solve, is going down, is where's the zone and how is it running? And it's going to fluctuate in grade. We're hoping the widths stay right at 8 to 10 meters in width. This is a different shot of it now, looking from the west to the east. And you see the number 9 structure here, but you see it where it says open. There's a big gap in there. And then you see all the bubbles and everything here. A lot of mineralization in this pit. And the same goes for there'll be an underground over here underneath the pit also. So keep in mind, when we talk about underground, we'll be talking in 2 phases. One, the original pit concept. Later on, you'll have a second underground, but the first underground will most likely be vein number 9 that will take on first in the PEA. Okay, this map, this is a grade thickness map plan, and this might tell a little bit more story. It's plan view looking, but way up on the left corner up here, okay, most of this is all drilling that was done 2010, 11, and 12 with the Explorer Group. You know, they knew what they were doing as far as looking for deep deposits. They had to back the drill up way back here to get 750 to 1,000 meters in depth to put this resource base on the books here. Okay, what we've done is we found it way up dip up here on the lower right-hand side of the picture here. But we have to back our drill rigs very similar. So we said is, okay, let's show the market there's a line you drill, you follow. The geologists have now come up with the model that we follow this line. We spot our holes with this area to actually keep infilling within that line as we come down. So they're not vertical holes, they're angle holes, hitting a structure that's coming at you at about 60 to 70 degree dip from the south to the north. So it's a geometry problem here trying to hit the structure, and they're doing a really good job of it. Now the next one here on West Cache is a cross section again. We've shown this earlier on. But the point here is the core is very uniform, and you can actually see the cement package. You can see the pyrite, the chalcopyrite, you know, how it looks. This is hole number 30, 20-30, 20-42, and then 10-30. This was drilled in 2010. It looks very similar to what we're seeing up above. So we're highly confident that this 500-meter gap on the structure is going to tie in together. Now, this is another shot of it, same core here, but now what I'd like to do is show you 2009, 10-9, 21, 23. This is what got us really interested a year and a half, 2 ago to merge with Explorer. These are very deep holes, 670 meters. You've got 11 meters wide at 5 grams, and then you go to, so let's say pick on 30 here, 726 meters deep, 11 meters of 9 grams. That's very consistent as we drop down here. And there's very, very good grades. There's even some what I call super high grade, roughly 15 grams, and that's sitting about 333 meters in depth. We've still got to follow up on a lot of this, but we've got a lot of blue sky and a lot of territory to look at as we go. Okay, the West Cache project in itself. This is the plan. Okay, we complete the infill drilling of the known mineralization in the open pit. Okay, we have finished that. We're now ready for the data transfer between P&E consultants. They will do their third-party independent model of the project. The underground will come second. That'll come more toward the end of February to early March. Then they'll model that separately. But we won't stop drilling number 9. Number 9, when we turn out a PEA, it'll be whatever we get drilled up to a point at the end of February or March. But we'll keep drilling in that structure. What do I think the potential is? It's very big. It's a blue sky structure. We could be drilling on that for several years, both from the surface and when we get underground and set a drill platform and drive it, let's say 1,000 to 2,000 meters on strike right alongside of it and get drilled off on closer space centers. So it gives us a lot of flexibility for this. Internal geological model, we've started putting ours together, and again, P&E consultants, and we'll get the data transfer. They do their models, then we get together and say, okay, how do the models compare? What do we think? How do we cost this? We start looking at other mines, more like, say, the Bell Creek mine or any other reports that have been turned out, and say, okay, how does our cost structure work according to theirs? So we get the right numbers into the PEA. Now, again, I mentioned before, we started all the baseline studies, and that's Blue Heron out of Timmins and Story Environmental of Hallaberry. They have got together and they're doing a great job of modeling everything from water hydrology to air, flora, and fauna, geochemistry, all the disciplines you've got to have when you go into the PEA or the final permitting phase to actually get a permit to go underground. Now, the real plan says, okay, what's the closure plan at the end of the day? That's really your permit at the end of the day, is how are you going to close your site and be a good steward of the environment? So our goal then, we'll say, we'll fast forward it 9 to 12 months from now. We should be underground or getting started underground, setting stopes up and setting custom mill ore to a mill That next step would then bring us to the pre-feasibility, feasibility stage, where it all comes together to say, okay, what type of project is this? What type of open pit? What type of underground? How many tons? We'll have all those answers when we get the underground done and we get the planning completed between both the modeling on the open pit and the underground to tell us what size of mill are we going to build here. Now, would I come up with a mill that's nearby that I could purchase or lease? I'd like to do that. We're still working on that phase, but in the end, I'll tell anybody that you're better having a mill right on site if you can have it. Now, that doesn't mean Lakeshore's wrong next door to us. They've got the Bell Creek on the other side. They're better served trucking their ore on the other side of Timmins to their sister mine at Bell Creek and using the 5,000 ton a day mill over there. That's one option for us, I get mentioned, for test milling. Now, this shot on the next one is just a comparable to say, where are we? We're in the middle, and where do I hope to be, say, this time next year? Way on the left side over here. The tale will be told with the number of ounces, what's the cost of production, what's the value per ounce we can put on the books here. And that's what it's all about, this study. Now, what do we have for the market? Well, we're in a great jurisdiction. We're very close to Timmins, Ontario. It's a great mining camp to be in. We started with over 1 million ounces to improve it up on mainly grade. Now, are we going to add ounces? Sure, we're going to add ounces, but I want quality ounces. But underground, if we're in the 5 to 7 gram range, I'd be happy. Open pit, if you're in the 2.5 to 3.5 and even 4, I'm really happy on that. Very economic. We've got, all the earmarks of the high-grade low vein system that indicates that you're very similar to any of these mines like the Hollinger, McIntyre, or the previous mine I developed, Black Fox, that McEwen's mining there. We've got a proven, experienced board, and we're well on the way to becoming a junior mining company and a producer. That's our goal. So with that, I'll turn it back over to Jacob for questions.
Excellent. Thank you, Dave. We've got a number of questions, so why don't we dive right in? First question from a participant here is asking if you could tell us some more about the Dyer claims and why you were so interested to add them to the package at West Cache.
That's a really good question. What I did is, first I go through a paranoia phase that somebody's going to jump on our vein structures. And so the geologists quickly did a strike dip, and they said, number 8, 7, 8, and the new 9 is going over there. It's going to hit that property, if the geology holds together. Now, there has been gold drilled there in the past. Patrick Dwyer's father actually did the drilling, and he hit gold. But he didn't hit the high-grade gold, at that time. Economics were different in the 1920s and 30s. And the family's been offered many deals to sell the property. And when I called him, he said, Dave, why would you want to buy my property? I've turned down everybody. And I said, because there's gold there. He goes, thank you. Nobody has told me that. And I said, okay, so we bought the property. We didn't pay a lot for it. There is a royalty on it that we can buy out. So I thought it was a great addition to our property package. So it gives us almost 2 kilometers of strike extra on these structures. It's big time blue sky.
Great. It's a good question and good answer. Next question from our participant is asking again about consolidating shares, which you touched on, but maybe you can just elaborate a bit there.
I'm never a fan of consolidating shares if your market's moving and at the right time. I've seen so many companies consolidate, and then they don't come behind it with some great announcement, or a study that says you got 1 million ounces of gold. You've got to have a driver behind it to take your stock price forward. You're going to reintroduce the company as a reconsolidated company. Well, you got to have a reason for that. And what I'm looking at, I think the best time is when the PEA is coming out. You tell the market, okay, we're ready. Here's the value. And the NPV value of that, when that report comes out, will set your share price. So that's the goal. All goals are goals, but that's what I'd like to do, is introduce the new company as a reconsolidated company with a PEA with a value behind it.
Yeah, I concur with you completely. I know there are some people who prefer to have a higher share price for things like margin requirements and such, but I think you've got a good strategy there for that. Next question from a participant is wondering if there are any targets that have now become a lower priority because for the PEA due to the success of Zone 9.
You know, that's a really good question. If we hadn't hit Zone 9, he's right. There would be other targets. The priorities would be moving it east and west in that pit. And we've only got so much time before all the data's got to be into the PDE consultant. So we said, okay, those priorities were, say, secondary to infilling the pit. Now they become third or fourth. So the vein number 9 was the second priority as we infilled the pit. Once the infill pit got done, now there's 2 rigs drilling on vein 9. That's the number 1 priority. But stay tuned, because once the PA is done, we're not done drilling on that property.
Yeah, and I agree with you. You kind of do have to just pick a time and cut off the drilling for the PUA, because you could keep drilling this for years and years and years, but it's nice to update the resource and put some numbers around.
Yeah, most definitely.
Yeah. Okay, another question here asking about what kind of voltage power requirements do you anticipate to support this project? I know you have power line on the property, but would that need to be upgraded at all?
You know, I can't, that's a real tough question. That's one you need to know exactly. If you don't have a power line into the bush, you have a real problem, whether you're on diesel generators or whatnot. But that one probably will be answered into the pre-feasibility, but not the PEA. Now, normal mine will range, depending on what type of mill you have and fan configurations and everything else, between 4 megs and probably 10 megs. You know, it's a wide range, but it depends on the size of the mill. Obviously, the bigger the motors on the grinders and the hoisting and that sort of thing, you'll have a big demand. So a smaller mine, let's say at 4 megs of draw, up to 10, you know, if you're a larger mine.
Mm-hmm.
And will it have to be upgraded? We have not looked at that yet. It could be part of the equation here, you know, as we move forward. But, you know, it's a really good question, but that'll be solved not in the PEA, but in the pre-feasibility study.
Yeah, and it's far easier to upgrade power requirements than it is to bring them in.
That's correct. If you got to bring a line in, it's X dollars per meter bringing it in, and that's a big cost of a project usually.
Yeah, you know? And it can add to the permitting process as well.
Yeah.
Okay, another question here from a participant, just asking about the options and warrants, if you could comment on how many of those are in the money at present.
Let's say, I would say all the options are in the money. The warrants, we'll say a good portion of them are. They range anywhere from, we'll say 8 cents to 16 cents, you know, just a wide range to talk. So some of those are in the money. We'll give it like a 40% are in the money, and probably 60 are not in the money yet. Mm-hmm. But I'm hoping they will be in the money pretty soon.
Yeah. It's always a nice source of easy cash flow for a junior company while they're spending on drilling like Galion is.
Yeah, that adds to it, what you can do.
Mm-hmm. Here's another question. We're getting a lot of really good questions here. I don't know what it is about today, but somebody asking about the thickness of the till across the property, which is important.
The till on, let's say the open pit, maybe 15 meters to maximum 30, 35 meters. But right on top of number 9, the structure must have been softer. And as the glacial boulders that were underneath the glacier came through, it ripped the top off. It's anywhere from, we'll say, a low of 20 up to 60 meters in depth of that glacial alluvium. Mm-hmm. And,
which is high for Timmins, but not an issue.
No, it's not an issue. Right now, I don't see, I'll let P&E correct me, I don't see on 9 where that will pull into a pit right now, mainly because the glacial field is pretty deep in that area. So it may just have to be mined from underground, unless on strike, it starts coming up toward the surface.
Okay. Here's another good question. One of our participants asking if you have any idea of a potential stripping ratio for the open pits.
You know, the strip ratio, I think originally they were looking at was about 8 to 10 to 1. And now that we've expanded the pit, we got the middle, I think you're probably going to end up with a low of 5, maybe a high of 7, something like that. But keep in mind, when I call strip ratio, this is sand gravel that are probably with dozers and scrapers moved. You know, we're talking massive movement quickly, and it's very, very low cost to move sand and gravel as compared to drill blast and muck, a waste product.
So that number would be including the kind of pre-strip of the.
It'd be the pre-strip, everything in there. Yeah.
Yeah.
So you know, if you want to look at
4 once you're got the pre-strip done.
Yeah, once we got the pre-strip ground, it should be 3 to 1, 4 to 1 max. Yeah.
Excellent.
We'll have to wait for the study to come out, but I don't foresee it being a big strip ratio once you get the glacial alluvium removed.
Okay, another good question here asking if there's any way you could give us some indication of metallurgical testing. Will there be new met data in the PEA, or will it be really based on prior information?
Both. Those are real good questions. There was a very in-depth study done by Explore on the open pit area and what they thought was the underground at the time. And it showed recoveries low of 94 up to, say, 97% recovery. It's very easily liberated by crushing, you know, in ball mills and then cyanide leaching. That's the preferred method of recovery. Now, we have done some preliminary ones that we haven't released, and I'll just tell you, it was the same. Grinding index is the same, and the recovery is about 94 to 97% recovery. Now, saying that, we will be doing over the next month to 2 months, you know, feeding it into the PEA, another small study specifically geared to vein number 9, just so we've got our act together on that. But right now, the preliminary bottle rolls, I say, they're studies, but they're not say. That's why I step out and say, yeah, we did some studies. They're bottle roll studies from the lab that show 97%, 98% recovery. So the gold does come out very quickly.
Which is very typical in Timmins.
It's exactly the same recoveries you'll see the Newmont probably is achieving, the Black Fox mine's achieving, that sort of thing. Yeah. No arsenics in the ore, you know. Thank goodness. Not that you can't handle those. We just don't have it in our ores there. But there is pyrite, a little bit of calco and that sort of thing. You get a little sphalerite in there, but nothing that hurts leaching at all.
Right, and that segues excellently into the next question that asks if you are looking at any ore sorting technology given the coarse sulfide content in the ore body.
Are we? We are. That is a dead giveaway when you're looking at the core. The geologists now have a pretty good feel when they're actually looking at the core. They can say it's got 1%, 2%, 3%, and 6% pyrite. And then they'll actually give me an estimate on grade. And they said, okay, let's take a bet on what it is. So, you know, visually, they can see what it is. You know, and they'll say, okay, that's going to run 2 grams. That's going to run 7 grams. And then the 6% of pyrite, it's probably going to run more toward 12 grams or something like that. I'm just giving you a ballpark in here, but there is a correlation. And then someone may ask, okay, can you go to crush grind and float that and don't cyanide everything and just float con? Yes, you can. That may work very well. The trade-off study is in what percentage of recovery, because if you float, you float the metal up first. What is your loss in that waste rock that just went down? You may have lost 1 or 2%, maybe 3%, and then you're going to cyanide leach concentrate. And then what's the recovery of that? So you may be doubling up on your losses, both from a concentrate and a whole ore cyanidization. So instead of getting 97% recovery, you may be lowering it down to 93 or 94 because you actually did a con float. But then you have to look at and weigh the cost structure. What does it cost to recover that gold? You know, is it more economic to float the pyrite first, cyanide leach it, you know, with the gold in it, or just cyanide leach, you know, the whole ore? Now, I don't have the answer for that, but that will be studied. But my guesstimate is whole horse ionization being the template in the camp probably is the way to go.
Yeah, that'd be my guess as well. But again, very good question. Okay. Next question from a participant is asking if you have an opinion as to why the value has not been really recognized in the market cap of the company as of yet.
That's my fault. I'm not telling the story. That's why I'm on with you, Jacob. I'm trying to tell the story to the market. And, having COVID, obviously it really hurts not going, we're not into PDAC. We're not going to the money show in Florida, and the ones up in Vancouver, BC. That does hurt you. We've got to get out and tell our story. We've got to get marketing going. And, I'm a mining engineer and everybody's a geologist and things. We need to put our other hats on. And so it's our fault. We need to get out and tell the story. And once we start getting the right market hearing the story, I think you'll see a big change.
Mm-hmm. Yeah, I'm sure that companies in the camp are paying attention, but the company is relatively new. When we first spoke, I really didn't know much about this. I was quite surprised to hear the story. So, I feel like there's probably a fair number of people in the industry that are not that familiar with the story as well.
Yeah, the more people we can get in front of, the more we can tell the story that, hey, we really have a great project. We have a real mine coming. We've got something for the Timmins camp, the people, and say 2 years from now, we should be a totally different shaped company. Going through feasibility study and telling the market we're going to build a mill or we bought a mill or what we're doing, and here's the production profile. So the grades, the volumes, everything we're seeing is positive on this project.
Yeah, and that's a great segue to the next question from a participant is asking, is your goal to make a mine or sell the asset? I think I know what the answer is, but I'll of course let you answer.
Well, I'll give you the answer I've given everybody. My career is I'm going to build a mine. I'm a mine builder, and that's why I'm here. And that's why we got together with Explore Resources is I said, I can build this mine. So we started from there, and every project and company I've been with that I've developed, we've built mines. And I wouldn't be doing this if I didn't think I can build a mine. So the answer is we're going to build a mine.
Great.
We've just got to take we just have to take the steps to get there. The drill phase, the PEA stage, the pre-feasibility. Once you get to the feasibility stage, then we define, what size it's going to be and what's the capital cost and what's our cost per ounce and that sort of thing.
Mm-hmm. Okay, there's a question here specifically regarding one of your comments. They mentioned that you did speak of Newmont, and they're wondering if you're actively in discussions with other regional groups and what value would a larger mining company potentially bring to the table for Galion besides obviously capital.
Number one is right now I'm not talking to anyone. I did mention that we've talked to the guys at Bell Creek. This is more the operating side to say, okay, in 18 months down the road, 12 to 18 months, do you have room for custom ores in your mill because we believe your mill can run it the best? We have had those discussions. There's no answers yet to that. Have we talked to Newmont yet? No, we will at the right time. We just haven't done that. As far as financing, we're financed right now fully to get through the PEA and what we need to do on this project. We'll define the next step. What's it going to be to go get underground? I don't know what the P&E report's going to say for meters of ramp, but let's just throw a figure out 30 to 35 million in ramp costs and that sort of thing. Where's that going to come from? Could that be another company? Possibly. I'd prefer at this stage when we put the ramp and we develop, we do it ourselves, that we use a financier, we borrow the money, we do some equity in the market, maybe some financing on it. I'd like to do it myself, and that's what I've done in the past. But would I not talk to other companies? Sure I would, to see where they sit or where they would fit within it. The best time really is, toward the construction phase of a project. Let's say you're going to build a mill. The price tag, I'll just throw it out, is 80 to 100 million or 125 million. Can you do that, or would you be better served to go into partnership with another company? You may be, but we'll have to weigh that when the time comes. My preference is always go it alone, do it yourself, and I always hear companies say, gosh, we're a great takeover target. I hope I'm not. I don't want to be taken over. I want to build a mine, and we want to get the value for the shareholders as high as we can get it. You build it and they will come.
Yeah, and that brings up a point I wanted to ask you about. You mentioned that you're already working on permitting for a potential decline. Can you elaborate a little bit on that?
Sure. You've got to get through the ministry on that, and that requires all your environmental studies, but you also have to go to the surveying phase, and you have to get them to recognize the survey's got to be done. The surveyor general gives an order and says, okay, we're ready to survey, and here's all the parameters. What I've understood is they're just about to do that in the next few weeks. This one will be the most complex survey ever done in Timmins because the land package is so big, and we also have a highway running through it. We have a power line running through it. So everything has to be taken into account as they do the survey. So it took quite a while for them to put everything together, but I think they're about there. And then along with the ministry will award the contract for the survey. That will take about 3 to 5 months, say, to get done. Once that's done, then we're completed on it. And once they tell us it's completed, that opens the door up for mining. But at the same time, you've got to actually run a parallel studies on all the environmental, the floral and fauna, the water, the hydrology. You have to have all your data and ore characterization, rock characterization. Everything's got to be in and then delivered in one application to the ministry.
And the archaeological study as well.
Yeah, we've got most of those done now. There's, I can't say Explorer didn't start it. They did. They started a lot of the water and hydrology. And then by bringing in Blue Heron and Story together, they have different disciplines. They just rocket fired this one, and they took it way up the curve really fast over the last, say, 6 to 9 months. We've got about another 6 months to go on the studies. You've got to have so many quarters of water sampling and study and that sort of thing. We've got all the groundwater hydro holes drilled, monitored, and that sort of thing already. So I think we're getting our homework done here, and we've got some great people working with us on this.
Great. Maybe we'll just close up with one more question. One of the participants is asking if you have any new geophysical work planned for this year.
For this year, no. Or let's say the winter season that we're doing on this program, no. But the next one, the geologists have already asked, look, can we soil sample down to the south areas? Can we run another geophysics program there? And the answer is, I told them, yes. Right when we get the PA done, right after that, in probably June to July, obviously after the snow leaves, that's when the next phase will come. And I think that's a really good question because we do need more work done. You bet.
Great. Okay. Well, I think we'll close out here. Obviously, I'd like to sincerely thank David for taking the time to be with us today, as well as the audience members for participating and all their great questions. I'll just note that our next webinar will be with North Isle Copper and Gold on Monday, February 8th at 2 p.m., which I'll be hosting, and will include Sam Lee, President and CEO, and Nicholas Van Dyke, who is VP Corporate Development and Investor Relations. So once again, thanks very much, and stay safe, everyone.
Yeah, thank you, Jacob. Thank you, Red Cloud Securities. Appreciate it.